just at the airport, about to head back to Sydney. The purpose of this trip to Victoria was to work out where the good suburbs are to invest in. You may be thinking, what's a good suburb? So it's like making Goldilocks's porridge. You don't want it too hot, you don't want it too cold, you want it just right. So too hot is buying in an affluent or a blue chip area. You don't want to buy in a blue chip area because you'll overpay and you'll have a low rental yield. And if you buy a, say, $1 million plus property with a yield of 2 to 3%, you'll get stuck with servicing because it'll be heavily negative geared. On the other side of the coin, you don't want to buy in a cold area, being a real rough area with high amounts of housing commission, because it comes with obvious risks of damaging the property and so forth, but also suppresses the capital growth potential of the property in the thick housing commission pockets. So you want to be just right. You want to be right in the middle. So you don't want to be right in the thick of the housing commission, or you don't want to be right in the affluent areas, but you want to be just about right in between, the suburbs in between, or the streets in between, where you can pick the properties up for less than replacement costs, being a house less than 500 grand, a unit less than 350 grand, with a high rental yield. But then the way the banks look at it is they compare it to surrounding suburbs or surrounding streets with a 5 to 10k radius of comparable sales. So if you can pick up a property for, say, 350 grand that has a strong rental yield, that's in an area that has low amounts of housing commission, but is close to or on the fringe of a pocket of high housing commission, but is also on the fringe or close to the affluent areas, being just about right, the banks value it higher on paper and it cash flows better. So it is a bit of a game of finance as well, where you can need to get into the market where it's got the room to gentrify and grow in value, but also it's got a higher valuation based off comparable sales that you can draw equity, recycle the equity, and keep moving forward relatively quickly to keep building a portfolio. So it can be a bit of an art. Property investment is a bit of part art, part science, and the art is working out where the good suburbs are, being good as in not too expensive, not too cheap, but in an area that you can feel that it will have growth long term due to their location.